zoned land tax. So we're going to try and discuss it and learn about it as much as possible. And this is something we in IFA have campaigned for some time, and something I know is very concerning for a lot of farmers out there at the moment. So tonight we have Shane Whelan, our IFA Policy Executive, will give us a quick overview of the tax itself and why we feel that it is very penal tax on Irish farmers. We have, and just actually before I go any further, are we able, is it recording tonight, Shane? I see the red dot on.
It is, Rosemary, yeah.
Yes, just to let everybody know that the recording has started. I hope you're okay with that, because I think it would be of benefit to us going forward if we're able to record it and put it up on the IFA website. So we have Harry Walsh from HW Planning, based in Ballincollig, County Cork. And Harry will share with us some practical points on pulling together a submission to the local authority, both from the perspective of challenging the residential zoned land tax or changing your zone status. And then finally, we'll have James Staines from Staines Law. We'll look at the tax from a legal perspective and share also some considerations to bear in mind if approached about subject to planning partnerships. So, and then after those presentations, we'll open it to the floor for questions and for concluding remarks afterwards. So maybe at this stage, I'll hand it over to you, Shane. And Shane has a presentation there for us. Thank you, Shane.
Perfect. Thanks, Rosemary. I'll just share my screen there. So you might let me know when if you can see it. Can you see that slide, Rosemary?
No, I can't yet now, and I'm on it.
Yeah, we can see it from this side.
You can see it, okay. There might be just your connection there, Rosemary.
Maybe, yeah, work away.
Yeah, so look, first of all, good afternoon, everyone. As Rosemary said, I'm a Policy Executive on the Farm Business Committee, and kind of what I hope to do for the next couple of minutes really is just to give you some outline in terms of the zone residential land tax at a high level, some of the key elements involved in on it, and certainly from an IFA perspective, some of the serious concerns we would have of it. I suppose if you leave from my side in terms of, before handing over to Harry and James, maybe three key takeaway messages that I hope you leave with. First of all is that IFA will continue to campaign to get farmland exempt from the residential loans and land tax, and be under no assurances of that. But from your own perspective, in the short term, first of all, you know, it's imperative that everyone knows where they stand with the residential land tax and whether they're liable or not. So I'd encourage everyone after the call, if you haven't done so already, to have a look at the local authority maps, either in the local offices or even online, and see if you're potentially liable for this tax. The other item then, and the final point, takeaway message, is to get your submissions in and get them in relatively quickly. The deadline is fast approaching, so that the 1st of January is when farmers or impacted landowners, if they want to make a challenge to the inclusion within the zone land tax, they have to have their submission in by the 1st of January. So look, this will be some of the items that we'll cover off in the next couple of slides, and even what Harry and James will cover off later on. So the zone land tax, look at what is it. Look at it, it's a new tax that's coming into force into 2024. It's replacing the vacant site levy that was there. It was introduced under the Finance Act in 2021. And it's a 3% annual market value tax that the farmer or a trained professional provides on a self-assessed basis. And it's a per annum tax. So it's significantly penal on the part of impacted landowners. As I said, it replaces the vacant site levy, but one notable and distinct difference is that, you know, farmland was exempt from vacant site levy. That is not currently the case under the zone residential land tax. And the other key element of point of differentiation is that, unlike the vacant site levy, which was administered by the local authorities, the zone residential land tax is going to be administered by the revenue commissioners. So it's a very different mechanism and beast than the vacant site levy, and certainly something to be very much familiar on. In terms of lands, so as I said, one of the key actions is to see where you are in terms of being liable or not for it. So currently, for lands to be liable on or after the 1st of January 2022, it must be zone residential and serviced and have service capacity on it, and also be non-contaminated lands or sites of archaeological importance. Now, I suppose at a high level, these are probably the areas fundamentally that you're potentially going to challenge under in terms of your inclusion, or otherwise under the zone status, under the status of the zone residential land tax, in which Harry will cover off later on in terms of each individual points themselves. There are exemptions and exclusions currently within the legislation. So existing residential property, including gardens and yards, are currently exempt, as is own residential land where a business provides services to residents adjacent to the residential areas. For example, a corner shop, it's exempt, particularly where they're also currently exposed to commercial rates. The zone land mixed use, including residential, where it's reasonable to consider that land is an integral to the operation of the farm business, or for the business carried out there or beside it. Now, that's one of the exclusions, particularly in terms of agricultural land that's mixed use, including residential, that kind of strengthens a potential case to have land removed from the zone residential tax. So it's certainly one, if in the scenario of mixed use residential, to be certainly mindful of. Other land that's excluded currently is that where there's certain infrastructure or facilities provided, by way of utilities, transport, facilities for social, community and recreational purposes. Similarly, any land that's currently, subject to the derelict site levy is currently exempt. And as I touched on previously in the previous slide, any land that may be prone for flooding, any kind of physical condition, or as I touched on, anything of cultural or historic importance may be excluded or exempt from the tax currently. I suppose from our own perspective and the IFA perspective, as I said, one of the key takeaways from this meeting is that we will continue, to campaign hard to get farmland exempt from the zone residential land tax. We very much understand the housing challenges that's out there and the need for 33,000 houses to be built per year, and indeed the sentiment of the zone residential land tax. But, we strongly oppose the inclusion of farmland that currently forms an integral part of the farm business within its remit. And really, from our perspective, the zone residential land tax as it currently stands is a poorly designed, very much ill-targeted, disproportionate tax, particularly on farm families. It cannot in any way be deemed kind of fair or equitable, and certainly from our perspective, as I said, we will be campaigning hard that farmland is exempt from it. There's a number of kind of different areas and perspectives why it's particularly penal on farmers. First of all, there's no account of purpose or intent in the design of the Act. So look, there's farmers out there, on towns and villages throughout rural Ireland that have farmed lands for generations. The towns and villages encroached upon them rather than the other way around. They farmed the land for generations. As I said, all they want to do is farm the land. Many of them may not be actually aware of the zone status of the land. So the county development maps may be developed every couple of years, and with kind of expanding hinterlands, it may pull an increasing amount of land within it in terms of zoned residential. So that would be the significant concern, particularly when you think the second point there, where there is no provision currently made for the direct engagement with impacted landowners. The legislation currently provides that the local authorities only have to make aware the provision of the maps within their offices and the online. They don't have to directly engage or impact with the local landowners. And certainly, as I said, when you take them 2 points into consideration, the farmers out there that never actively sought the land to be impacted are particularly vulnerable if they don't know about it. So I suppose that's one of the preconditions for this meeting tonight, and I hope, from it, the word will spread out from yourselves to other potentially impacted farmers. The other kind of element that's particularly penal is that there's no commercial demand or housing need actually built into the design of the tax whatsoever. It's a very blunt instrument, broad instrument. So, for example, we've been talking to farmers in the last couple of weeks, and increasingly so, where there is a significantly higher amount of land currently zoned than what's needed on an annual basis. And just to give you a simple example, talking to a farmer outside Killarney recently, he's 45 acres impacted potentially by this tax. He said currently there's 263 acres zoned residential and serviced, yet on an annual basis there's only about 10 acres built on. So taking them together, some farmers out there maybe paying a tax, 3% annual market tax, but their land may not be needed for many years ahead. So there's no fairness and equity in that. And on the flip side of that, there's also farmers out there with zoned and residential and serviced land that would be happy to sell it, but there's no kind of commercial demand there. There's no kind of building developer looking to take it. And look, we have an example from a farmer, for example, in North Dublin, that has, in that exact scenario, zone residential and service land on the market for years. So look at, in both scenarios, I suppose it's very penal on farmers. And the final point really is that the actual 3% market value tax itself is very disproportionate to the income yield and potential that can be gleaned from farming. And maybe just to build on that a little bit, we kind of just have an example here, and look at it, it's very much an arbitrary example and used for indicative purposes. But if you look at the second column there on the left hand side, it looks at the farm income on a per acre basis for a 5-year average spanning 2017 to 2021 across all the sectors. And then if you look at the blue shaded area, kind of use an example of zone residential and service farmland at a very punitive 25,000 per acre. When you apply your 3% tax on that, it's comes out at about €750 per acre per year. So even at that kind of very conservative level, you can see across all the sectors the cost per acre of having its owned land. And naturally, if the value of the land inflates, the value of the liability inflates, and the differential in terms of the income yield is also amplified. So again, a very simple and just somewhat illustrative example. If you take an average sized suckler farmer out there that may have 7 acres of land zoned residential, if you value that at 50,000 an acre, that farmer will potentially be liable for 10,500 per annum. Now, when you take that on its own, is penal enough, but particularly when you consider that in 2021, the farm income for the full 33 hectares of this farmer was a mere 10,865. So it's very much disproportionate on farmers, and look at, our big concern is that it would force many farmers to sell in many instances. But as I said, where there is no commercial demand there, it's very, very penal. So look at this as something that has been very much a priority from our perspective since the Finance Act in 2021 when it was first touted. We've held meetings with the Department of Finance and Revenue shortly after the Finance Bill, and kind of to create awareness. We've conducted a number of different initiatives. So we had an article in the Farmers Journal Land Report earlier on in March. We've done various different press articles, radio interviews. We've had multiple engagements and submissions with various senior government officials. You can see them there. We had a substantial submission then to the Commission on Taxation and Welfare report, and following that, 10 days ago, we had a presentation on the Special Committee of Budgetary Oversight. And from that, look, there was unanimous agreement that farmland should be exempt from it. So following that, we sent letters to that seeking that they would bring it forward to the Dáil for further discussion and debate. And this week, actually, it was brought up in leaders' questions this week. But as well as that, we've also sent letters, to Cabinet and Ministers of State in terms of, raising our serious concerns with this tax, and we'll be replicating that in the weeks to come when we'll send it out to our various different county executives that they can lobby to their local councillors to ensure that kind of farmland where appeals are made, etc., that it's looked on relatively favourably. So it is very much something that's very much on the radar, and something that we will continue to campaign very much to get farmland exempt from it. But bringing it back to yourself and maybe some kind of action points from today's meeting, really, as I said, it's imperative that you know where you stand. So I'd encourage everyone really to have a look at the maps. As I said, they are available in all the local authority offices, and you can also see them online. So the link is there. We'll put the slides up after the meeting, and you can access it themselves. But when you get in on the map itself, you can zoom into your respective part of the country. And I've just taken a screen grab here for Ennis. So you can see very quickly there's a lot of yellow area and there's a smaller parcels of red area. And both are potentially liable to the zone residential land tax. So the yellow area is zone residential use, and the red area is zoned mixed use, including residential. So you can see there from that there is a significant parcel ground.
You're on mute.
You're muted there, Shane.
Sorry, thanks.
Just on mute again there, Shane.
Okay. I don't know what's going on. So, you can see that there's a lot of land impacted there, but you can zoom into your own individual parcel of land and see your own situation. And again, I think it's imperative that everyone really sees where they stand, because from that it'll dictate whether you need to make a submission or not following. Sorry, my computer just frozen now. Bear with me 1 second. I know it's just my computer is frozen, so I'll just see can I get it going again. Okay, so just let me know there if you can see that. I just put it up in screen mode. Can you see that there?
We can, if you could just make it small bigger.
Okay. So, so can I make the screen bigger this way? Apologies, no, I don't know why it's. Hopefully that's a little bit better. I don't know what's going on with my computer screen, but so as I said, when you see the maps, I suppose you have a couple of options. And first of all, look at, you may see the map, think you're in scope for the tax. You may decide you're happy enough, leave things the way they are. You're going to pay the tax. What you will be required to do then is from kind of late 2023, when the facilities is up on Revenue Online system, to register for the tax. You'll be charged from the 1st of February 2024, and you'll be required to make a file and return by the 23rd of May in 2024. It's important to know, look, there's a serious interest attached to this, and it's important to be compliant with it. There's kind of 8% per annum interest being charged on it. There's surge charges applied to it, both in terms of an undervaluation of the land, up to 30%, where it's undervalued by at least 33%. And also there's a surcharge for late filing of returns, and that's equated on a percentage on an annual basis. The other important point to note is that any unpaid or existing liability to it remains a charge on the land, so it can have an impact both in terms of future sales and future transfers of the farm. So it's important to be compliant if you choose, as I said, to go down the route that you don't want to challenge it in first instance. That's, I suppose, the other option you have if you identify that you are liable. You can challenge the inclusion, and as I said, Harry will cover off on it, but it needs to be made before the 1st of January. And again, it's imperative that anyone that is considering challenges puts in a submission by the 1st of January. It has to be in writing to the local authority. You need to have your name, address, proof of ownership, and also OSI maps identifying the impacted land. The other option you have under this wave is to seek to have the zone status of the land changed. And again, it'll come back to the local authority to make the decision. And in both instances, in terms of challenging the zone status and indeed the liability for the tax, if the local authority decision doesn't fall your way, you have the option to appeal it to An Bord Pleanála. There's also a number of grounds made within the legislation to defer payment on it. So, for example, if residential development has commenced on it, so you've got your planning permission, it relates to residential development, and you have a commencement notice, the payment can be deferred. If the development is completed in full within the timeline of the planning permission, no payment is potentially being made on it. There's also a deferred payment if there is an appeal made in terms of your inclusion within the tax or not, and also if there's kind of a challenge to the planning permission application, it can also result in a deferred payment. The other item that was included under the finance bill only in recent weeks is that lands that are currently engaged in a long-term lease before the 1st of January 2022, where there's kind of reasonable grounds that prevent development occurring, it can result in a deferred payment. So there are a number of items there that deferred payment may be an option. The other point to note, I suppose, is that when you look at the map, there will be a lot of areas yellow, as I said. Existing dwelling are exempt, but if the cutilage, in other words, the gardens, past driveways or yards associated with the house is greater than an acre in site, you still need to register for the zone land tax. but you won't incur any tax liability. And I suppose that's just an important consideration to make. If your area is less than an acre, you don't have to register for the zone land tax and you'll have no tax liability. But if your cutilage is over 1 acre, you still need to register for the zone land tax, but with no liability aligned. The final point I'll make really is, and I've touched on it a couple of times, it's imperative to get your submission in if so desired. So the timeline currently that's there is that the maps were available from the local authorities from the 1st of November. You have until the 1st of January to make your submission. The local authority then will come back with a determination by the 1st of April. Then you have a month to make an appeal to An Blower Penala, and they can return within 16 weeks. The other point to note is that even if you look at this map today and you say, hunky dory, there's no land, my land is not liable, you should look at the map and must look at the maps again from the 1st of November, because taking account the submissions received by kind of individuals on the first round, your land may fall within scope, or if there's a change zone status or a change service status within that period of time, you may find that your land may be included. So it's important not only to have a submission in before the 1st of January, but also before the 1st of May, review the map again. And there is kind of provision there in terms of making an appeal, etc. again, but in first instance it's imperative that it comes in. The final map of the zone residential land tax will come into play in terms of 1st of December in 2023, and from that then it's handed over to revenue really in terms of implementation and monitoring, etc. So look at that's kind of it from my perspective. As I said, you know, the 3 key takeaways from my end is that, again, IFA will continue to lobby hard to get farmland exempt on it. We've done a bit on it, and we will continue to lobby it on it. The second point, from your own perspective, see where you stand, look at the maps and know you're liable or not, and again, get your submissions in by the 1st of January. So look at, with that, I'll stop sharing and I'll hand you over to Harry, who'll give you some maybe practical tips in terms of pulling together your submission and that kind of thing. So thank you.
Okay, perfect. Shane, thank you very much.
Thanks, Shane.
Harry, yeah,
Yep.
Work away, Harry.
Can you see the screen, Rosemary? Yeah. Can you see my screen, Rosemary? Yeah.
Yeah, I think so.
Yeah.
Can,
You
yeah.
okay, Shane? Yeah.
Yeah.
Perfect.
Here too, yeah.
Yep. Thanks for that, Shane. So, evening, everyone. So, look, happy to be here tonight just to share some practical tips, as Shane had mentioned. On, look, we're making a number of submissions on behalf of landowners and farmers, and just some practical tips as to how, maybe what to focus on and what the local authority need to consider when they're assessing them. So, I suppose the first thing is, as we go along. Yep. So as Shane had mentioned there, look, as the local authority, first of all, if you're looking at the maps and you see that you are coloured yellow and you're coloured mixed use, and you're trying to figure out why you were there, I suppose the local authority then consider that your lands are zoned, that they are serviced, and they're not constrained or contaminated in any way. So that's why you're on the maps. Very important then in terms of making the submission. Obviously, Shane and the IFA will be lobbying away in the background, but I suppose between now and the 1st of January, which is only a couple of weeks ago, it is imperative that you get any submission that you have to make in by the 1st of January 2023. Now, submissions in accordance with the Act, look, the submissions have to either make the case for lands to be included or excluded from the final residential zoned land tax map. Now, as Shane touched on as well, and just put up on screen, there will be supplemental maps that come out on May 1st, 2023. So if you're not on the map at the moment, I would advise people to check back in when the supplemental maps are published. I was just doing a bit of a scout around a few submissions that were made in Cork City's electoral area there today, and there's submissions from a few people asking for lands to be included on the zoned residential land tax map. Now, you might think that that's unusual, but there is a certain cohort of people maybe out there, and from certain political parties, that are identifying lands that they think should be subject to this. So it is important to keep an eye on that. The next thing, I suppose, when you're looking at those maps and you're clicking at them, if you find your land parcel, a date might pop up on the side of the screen as to the date which the land was first considered to satisfy the criteria for inclusion in the map. Now, if that date is deemed to be before January 2022, that date won't appear. Actually, there'll be no date there, and those lands are deemed to be liable for tax in 2024. Now, a lot of the development plans around the country have only been really come into force this year, and definitely in Cork County and Cork City, our plans here didn't come into force till June and August of this year. So those lands that have been first zoned, they'll only be deemed to have met the criteria after the 1st of January 2022, and they'll just be liable for the tax after 2025. And going forward, in accordance with the legislation, lands will only become liable for the tax 3 years after the date on which they're first deemed to satisfy the criteria. So that's very important, to bear in mind that, if the lands do become eligible and satisfy the criteria into the future, people will have 3 years to try and activate those lands or do something with them. As Shane mentioned again, zoning submissions can also be made, and those zoning submissions will also have to be made up to January 2023. Now, in the context of zoning submissions, these have to be made by the 1st of January 2023, and they can only be made in this first year only. So this means that you cannot make zoning or submissions to have your lands dezoned in subsequent years of the residential land tax. So if you don't put in a submission to have your lands rezoned, by the 1st of January 2023, you can't do it next year. They won't accept them next year, and your next opportunity to have those lands dezoned or excluded from or dezoned and not zoned for development will be at the next development plan stage, and that could be depending on the year that your development plan is at. They're all recently enough adopted now, but that could be 5 or 6 years' time. Now, submissions to dezone land, they'll be assessed by the local authorities on the grounds of proper planning and sustainable development. Maybe lands that were zoned, within the last year or 2 years, I reckon local authorities are going to be slow to dezone those, unless you can make a valid submission on it. If they are in favour of dezoning your lands, they will require a variation to have them dezoned or to have them rezoned for another purpose. And again, any variation of the county development plan will have to go to a vote of elected members and require the support of 50% of them. In terms of other, submissions, again, you look the criteria for inclusion are that the lands must be zoned, they must be serviced, and they must be unaffected in terms of their physical condition, in terms of archaeology, heritage, and contamination. So I suppose in terms of the lands being zoned and, unaffected in terms of their physical condition, they're probably the easiest two things to deal with. I mean, the lands are either zoned for residential developments or they're not, and it's easy enough to find that out. And then in terms of their physical condition, if there is archaeology or heritage or contamination on your lands, you can make a submission to have them excluded on that basis. Other lands, which Shane mentioned as well, which are excluded, are any business that's on the lands that's paying commercial rates. And another avenue maybe for people to look for an exclusion is, like, some of you might have lands that might be used for social, community or governmental infrastructure and facilities. There's a list of them there that's based on the Act. Shane had them up as well. Education, health, there is the list of them there. Some of you may have sporting clubs that are leasing or are using some of your lands. If you have, and that land is being zoned for residential development, that is grounds to have those excluded. The other thing to note there, I suppose, is telecommunications. We have some landowners and farmers that have, energy and telecommunications infrastructure running through their lands. Now, in terms of that, we would be talking about fairly significant infrastructure. So in terms of energy infrastructure, you would have to be talking about maybe 110 kV or 220 kV energy infrastructure that's very difficult to move or very difficult to have rerouted. And in those instances, we'll be making submissions on behalf of landowners to say that the land is currently being used for energy infrastructure. So I think the two things that people might find most joy at would be maybe in terms of the energy infrastructure, a lot of pylons going through lands, a lot of high tension power going through lands, and also a lot of you might be facilitating local sports clubs, leasing your lands even on a temporary basis. Anyone that's on the derelict site register is not liable for this tax. And as well as that, some of you may have statutory designations precluding development on your lands. They could be protected views going through lands to castles or historic monuments or something like that. Again, that will preclude your inclusion on the lands. in terms of the resources and where you'll find a lot of stuff or maybe get a lot of information, a lot of the information that you will have, look, and you must try and get your hands on will be in your county development plans. So I'd encourage people to have a look at those. I'll touch on the information now that will be included, but again, whether your land is zoned will be included in the county development plan. Any of the designations that might restrict your development and that, they'll all be contained in the county development plan. The government have issued guidelines for planning authorities on the implementation of the residential zone land tax. They were out in June of this year, 2022. There is some helpful things in this. I think they're a lot more helpful than maybe they give a better interpretation and maybe trying to trawl through the Finance Act of 2021. And the Revenue have also issued guidance just in July of this year on the residential zoned land tax. So your local county development plan, the guidelines, and maybe the guidance from the Revenue are the three reference documents certainly that we're using and feeding off to base our submissions. So I suppose in terms of the zoned land, and you're
just gone on mute there, Harry, for some reason.
Back on, Shane? Yep. Can you hear me?
Yeah, you're good there now, Harry. Yeah.
Yep. Thanks for that. So I suppose in terms of zoned land, based on the National Planning Framework, all county development plans at the moment, if your land is zoned, those lands will have to be either identified as Tier 1 lands or Tier 2 lands. Now, Tier 1 lands are deemed to be lands that have access to existing development services and are typically within the existing built-up footprints of developed lands. Now, Tier 2 lands are lands that are considered they're not currently serviced or not sufficiently serviced, but they do have the potential to become fully serviced within the lifetime of the development plan. Now, development plan of a 6-year life, the Cork County development plan that I showed up there, was adopted in 2022. That'll run to 2028. So there is land identified within that for residential development that's currently not serviced, but the local authority feels and Irish Water feel that they could service it by 2028, and that could come forward for development. And these Tier 2 lands are typically, they're seen as extensions to towns and villages, and are usually adjacent to Tier 1 towns. But going forward, I think, and the first thing you should find out after is your land zoned. I think you should get yourselves into the county development plan and find out whether it's Tier 1 or Tier 2. And I think there is a certain amount of joy to be had if your lands are Tier 2, because I think you can adequately make the point then, look, that yes, my lands are zoned, but they don't fit the criteria at the moment because they don't have there's not capacity there to service them. And I think that is grounds for getting yourself off the register at present. Yep. So, sorry, just go back up one.
You're just on mute again there, Harry, for some reason.
Okay, now again, Shane?
Yeah, good to go. Yeah.
Yep. Thanks for that. So in terms of the service land, so the guidelines indicate that what constitutes zoned land, and that's considered to be where infrastructure is located adjoining, intersecting at the boundary or corner of a land bank in a nearby public road, or is connected with an existing development adjoining the land bank. The land should be considered to be connected or able to be connected, and therefore in scope. So that's important. I think the Act is a little bit more open than that, but I think these guidelines do give a much clearer indication of what's considered to be service at the moment. And where the land does not meet that criteria, the guidelines have indicated that the council have certain things to consider. So if planning permission is even granted on your lands, that doesn't necessarily mean that you are liable to pay the tax, especially where that planning permission is dependent on infrastructure works which are deemed to be outside of your control. So lots of planning permissions would have been granted on the basis that they're going to be connected to wastewater, or water is going to come to site, and that means maybe a significant amount of work by Irish Water or by the local authority. So in that instance, that the bringing of that infrastructure, the servicing of land, would deem to be outside your control. So that is one ground to indicate that that land wouldn't be serviced and therefore not in scope. Other things that they do consider within it, and I think this is helpful and more helpful in the Act, is that, like, it's only where connections to services involve minor works that the lands are considered to be in scope. So anything that's considered to be a significant extension of work or a significant investment in infrastructure that Irish Water or the local authority would be deemed to carry out, you know, don't come into scope. So in terms of minor works, I would imagine that means connections to the services that might be, you know, a couple of 100 meters, and, you know, the cost of which isn't going to be significant. And the other thing to watch out for, I suppose, and particularly we touch on in a minute in terms of wastewater, like if your connection to services require third-party lands or the third-party consents to take place, those lands are not deemed to be serviced and are also out of scope. So I think there's a lot of things there, you know, to be considered in terms of how to make the case that you don't meet the criteria. So the infrastructure that the local authorities will be assessing when they're deeming lands, or where they're trying to deem whether lands are in scope or out of scope, or whether they meet criteria, is the first thing is road access. And again, the local authority must take into account the ease of access to existing road. And I think, you know, the ease of access is important. So you can see in the guidelines, it's a bit different to the Acts. The guidelines talks about minor works and it talks about ease of access. So again, I mean, if something, you know, if a road that's outside, you know, a particular piece of property, if that needs a significant upgrade, you know, you won't be deemed to be liable to do that upgrade. It has to be done by the local authority. Again, those lands wouldn't deem to be serviceable and within scope at the moment. Footpaths and cycleways as well, they're, you know, becoming a massive issue within planning applications that we're dealing at the moment. And again, for land to be deemed to be serviced, there does need to be active or encouraging active modes of travel, and you do need to be able to connect your land to the existing footpath network in the town or village. So I suppose if your land, you know, if you have land and there's someone else between you and the village, or you need to maybe take someone's ditch, or you need to do something else to facilitate a footpath connection, then that's deemed to be requiring a third-party consent. I would argue that, you know, there's no ease of connection there. You're dependent on other third parties. You're depending on someone else to do something to the public road, to upgrade it or to put a footpath in. Again, I think in that instance, those lands would have to be deemed not to be serviced and outside the scope. Foul drainage, I suppose, again, you know, the guidelines indicate, again, it's ease of connection to the existing network should be the determining factor. If there's significant upgrades to be done, you're not expected to be doing those. That's the job of Irish Water. And again, you might be able to argue that, look, there's no ease of connecting to the foul storage network. So again, those lands would be out of scope. Water supply is the same, it's within the remit of Irish Water. You know, if you have to connect a couple of 100 meters down to the water supply, and those works are involved in the public road, those lands would deem to be serviced. But again, if there's more significant works to be done, they would, I think, be out of scope because of it. They're not involving minor works, and you don't have an ease of connection. Surface water is probably something as well that's, you know, well known to you. It can be tricky. You know, often, you know, getting an outfall or getting to a local stream or getting to a local river does require, you know, the consent of adjacent landowners, and again, that can be argued that we don't have wastewater connection, you know, or we don't have a connection available to us to the surface water drainage. And again, that's a determining factor and something that you can argue. So just in terms of the infrastructure and whether they're thinking lands are serviced, you know, you will be thinking about these 5 things. It's roads, footpaths are essential, foul water, and again, surface water drainage. So just in terms of what now, and I suppose just where we see the process and going forward, again, you are going to need to make your submission by the 1st of January. Those submissions will get in, they'll get to the local authority. They will have to determine your submission by the 1st of April. So on the 1st of April, you'll be notified of your submission or of the determination of the local authority. So if your submission is successful, your lands will be removed from the supplemental map that will be out on the 1st of May. Now, again, as we said at the start, it is important to check in these on the 1st of May, like in terms of the supplemental maps, to make sure that your lands haven't appeared on it because of the submission of somebody else. If you're unsuccessful, you have the opportunity to appeal that decision to the board. You have a month to do that, a calendar month, and those appeals have to be made to the board by the 1st of May. In accordance with the Act, the appealer, all those appeals are meant to be determined by the board by the 21st of August next year. That might be ambitious, depending on how many appeals they get. Again, this is for the entire country, so it's not just for your individual country or counties. This will all be done at the same time, so that they could be faced with a wave of appeals, and they may or may not get through that. But the ambition is that final maps will be out on the 1st of December 2023, as Shane said. And if you're on those maps, the liability will start to occur from 2024 or 2025, whenever you were deemed to be on it. So that's all from me, Shane. Thanks very much.
Okay, Harry, thank you very much there. And now we have James Staines from Staines Law to give us a perspective from after tax, from a legal and the considerations to be taken. James, are you on?
I'm indeed there. Thank you very much. So I think, to be fair to Shane and Harry, I don't have a huge amount to add from the technical side. I think they've covered that very well. But what I just would really want to emphasise, and again, is one, there's a very tight deadline to get your submissions in. They have to be in by the 1st of January. And I have a concern that if you're not in and you haven't made submission to have your land amended or changed, you've missed a train. I mean, on the 1st of January, that process starts. So even if it's a one-liner submitted in, most of the counties, as far as I can make out, have an online portal. Again, just to really emphasise the importance of that. And I know while IFA has done great lobbying, that I just don't think that deadline is going to be changed, because there's too much backed up down the line behind it. So again, if you take one thing away from this, check the maps, make your submission if it impacts upon you. A couple of questions we had seen before is the local authority have no obligation to notify you, and it's up to you to go and check the maps and check the area for yourself. You can go online to the local authority, or you can go down to their planning office, and I think a number of local libraries have it as well. But the fact that you're not notified by the local authority that your land is, the zone land is in the map, is not the local authority's problem, and will have to it's up to you to get your maps in terms of that. But again, while I think that's kind of repeating some of what Shane and Harry said, I really think it's important to emphasise those particular points in terms of that. A couple of points that we'd also been asked about before is can the state do this? I mean, it's your land. They're drawing a red line around it and saying you're now subject to tax. So, obviously, before you get there, is your land subject to tax? And again, Harry has gone through that in detail, building on what Shane said about the need for services. There are going to be some grey areas of interpretation in that, and I know Harry went through quite a lot of those. But there's a risk that different local authorities may end up with some level of different interpretation on it. So just be aware of that. But I think it is really important that the land has to be serviced. Again, the guidelines are more specific. The legislation talks about may and issues like that. And I have a slight concern as a lawyer that maybe a little bit of a grey area there that may cause some issues in terms of that. One other point, obviously, and I'm dealing with this in terms of the right of the state to do this. It was mentioned there that you could simply, one way around this is to simply ask the local authority to dezone your land, and that may work for some people. There's no prospect of it ever being built, so why not? But just to be clear, just because you ask the local authority to dezone your land does not mean they will do it. And Harry set out the process that they have to go through the local, they have to go through local area plans, 50% of the councillors voting. And it is being blunt, it's up to the discretion of the local authority whether they dezone you or not. So again, that leads on to the obvious question is, look, I don't want to be zoned. I want to be dezoned. They don't dezone you, and you're now subject to tax. And at the end of the day, the revenue will be collecting is not the local authority. It's a self-assessment tax. So you need to be very careful about valuations and issues like that. But on the property rights aspect, as you may be aware, you have certain property rights under the Constitution. There's what they call the unenumerated rights under Section 40, but there's specific property rights under Section 43. And while that's where the state acknowledges that you have property rights, they are entitled, for the benefit of the common good, to actually limit those rights. And the question is, by putting tax on your land.
You're just going to mute there again, James.
It just, in this particular case, your right to farm your land, in terms of that. Now, my concern about that, and we have no definitive formal legal opinion, but applying the general approach that the Supreme Court, for example, might take in this, you own your property, but it's not yours to do with what you like. Already, you're subject to planning restrictions. You're subject to.
You're muted again, James.
That, apologies. So you're restricted in terms of what you can do on your land, both environmentally, in terms of the way you manage the land and various issues like that. So the state absolutely has a right to interfere with your land and indeed tax it, because it is an asset. And I think the way that they will argue that they're entitled to do this, you may have applied for, and a number of people may have been actively involved in applying for planning. So the state, by granting that planning application, has now substantially or potentially substantially increased the value of your land. And the idea of land being zoned is not to allow you to land bank it and sell it on in 10, 20 years' time as a pension fund. It's there to ensure that it's built. Proper planning would say that there should be an adequate supply there, that the properties would be built out. And there would be great play obviously made of the current housing crisis. So I think, there will certainly be a challenge, I think, to seek to challenge the legislation that taxes your land where you don't want it to be. They would simply argue that if you're not happy with it, you can sell it and you can use that money to buy other farmland. And unfortunately, the courts, if they see land, we just say zoned land that you might sell for 600,000 for the few acres. The courts don't, but you may be more attached to that as the 2 or 3 acres, may be part of a grazing platform, may be part of access to your farm. You just may not want to sell the land because it's been in your family for many generations. Unfortunately, the court doesn't look at land the same way. If they see 600,000 worth of assets there in land, or 600,000 in cash, if you're forced to sell it because you don't want to pay the tax, and you can buy the land, the courts just simply won't, they won't make any differential between the value of cash and the value of the land to you personally. So from a legal point of view, I would be concerned that if it was to be challenged, and bear in mind, we're still in early days of looking at the legislation, and there will be grey areas as it wends its way through the system. But at the moment, I can certainly see a rational ground for what the state might assert if there was to be a challenge to the legislation in terms of that. So, Shane, do you want me to talk then about the property agreements, or is that do you want to keep that to later?
No, I'd say you might as well touch on it there now. In fairness, there may be some other questions that come up, but I think it's useful.
No problem. Okay, so I suppose there's an aside to this, and you have zoned land, and one reason that people don't particularly want to sell it is because they don't want to get the best value out of it, which would require a planning application to be made, and that is a long, tedious, expensive, and cumbersome process. And Harry would be very familiar with that. So there are, and it's interesting, I haven't seen this type of thing since before the Celtic Tiger. I hope that's not ominous in any way. But there are now a number of developers, and one of them particularly prominently, Glenveigh. You've probably seen the ads in the Farmers Journal and around the place. And they are looking to partner with landowners who have blocks of land for more than, I think it's over 8 acres. And what they will do is that they will work with you to go off and get planning on the land. And then when they get planning, they will close a contract and pay you an agreed price for it. So obviously, if you have zoned land, that's very helpful. If it's near services, or the services are likely to come through, or Glenveigh as a developer will be able to get services or buy services, that might become very attractive. So effectively, what they will do is the developer solicitor contracts will be drawn up, and effectively the closing date will be when they get an implementable planning permission. Obviously, I think that would need to be tidied up a bit to make sure that that is tightly defined. And effectively, when they get their planning permission, they will close the sale. They'll have paid you a non-refundable deposit, and then they will close the sale and pay the purchase price. Effectively, there will be a long stop date within it, so it doesn't run indefinitely, and they would have to get that planning within 2 years. And they may have an option with your consent of rolling it over if they're in the middle of, say, judicial review or something like that. I want to go back and get further planning. Now, that sounds all well and good, but there are a number of points that you need to consider carefully in relation to this. First of all, is the purchase price that they're offering you the best price in the land? It might be worth your while making inquiries, getting a specialist auctioneer in who'd be used to residential lands and see is the price that's been offered, is that a good price? Tax is going to be very important in this, because if you're selling the land or executing contracts, you will be triggering a potential CGT liability. And while if you transfer land to your children, there is a very high CGT threshold, but if you're selling lands, it's much lower at 750. So you need to be aware that any contract you might enter into could expose you to substantial capital gains tax liabilities, and you need to factor that into the price. And you also need to check with your tax advisor, when is the tax liability triggered. Signing a contract is arguably disposal of a contract. If it's subject to a condition, it isn't. We just need to be aware of that. Obviously, your title needs to be clean. And I know for the work we do, we frequently come across title that's still in the great-grandfather's name, and that can take a little bit of while to tidy up. Maybe burdens on the folio, rights of way. If you have a bank loan on the folio, you will certainly need the bank's consent to entering into this agreement, because that won't be paid off till the end. So all of those things need to be dealt with. Looking at the contract itself, I think it would need to be, again, you need to make sure that the milestones from hitting the planning are adequate and appropriate, that there's proper time limits put in, and it very clearly sets out what they must achieve throughout that. Now, another practical, where are we now? Very important, actually, if you are putting 8 or 10 acres of land or more in, it would be important to try, the developer will then go and put services in, and be important to ensure that you have access to those services for your retained land. So if you get zoning on the next 10-acre block of land, you already have access to water service, drains and roads. And I think that would be a hugely important part, because that adds immediate value to the land behind. Now, obviously, bearing in mind what Harry was saying, if your land is rezoned, you have access to services immediately adjacent, you could well be subject to that tax. But that's the double-edged sword that you have to deal with. So, but I do think that would be important. It's also important to consider that Glenveigh or whatever developer are not going to necessarily pay you the full value of the zone land, because they'll have put time, effort and expense in. No doubt they'll want to make their margin on it. So it may be worth your while, before you go down that route, is looking at the possibility of applying for planning yourself, or in conjunction with somebody else, because that would significantly enhance the value of the land. But again, it is a specialist. You don't just go off and willy-nilly do planning. It is there's a lot of expense involved, a lot of information, a lot of detail, and it may not be for everyone. So this is one advantage of dealing with a developer, is that they clearly have expertise, they have deep pockets, and it will certainly be on balance. It would be easier for them because they have the team and the resources and the expertise to go off and apply for planning, which you as an individual may not. But just to be clear, there are consultants out there like Harry and others who can work with landowners to apply for planning. But again, there would be a cost to you to that, which Glenveigh, if they were entering into an agreement, would deal with for you. So is this attractive? I haven't seen what the prices are likely to be, but there's certainly merit in looking at it. Someone else is doing all the heavy lifting. If the price is right and you're comfortable with selling your land for the housing development, obviously how that impacts upon the rest of your farm enterprise. And I think very importantly, how you see the tax issues arise. On a practical point, if this land is, if the land is, sorry, if something happens to you and you leave this land with this contract on it to somebody, to a family member, they may have difficulties getting agricultural relief depending upon what stage the contract is at. You just need to be slightly aware of that, or just keep an eye on that. Tax issues, proper pricing, and you know, and ensuring that the contracts are appropriate and protect you as the landowner. If you get those three right, this is certainly, you know, it may well be worth considering. It may work for some people, it doesn't work for everybody.
Okay, James.
Thank-
Okay. So thank you all very much to the contributors there, to James and to Harry and to Shane.